Hey traders from around the world, what's going on? It's me, Jeremy Alexander Newsome with Real Life Trading, and our mission is to enrich lives. We are doing that by helping educate and entertain people about what the stock market is, how it works, how you can trade it, how you can profit from it. We're looking at the SPY right now, which is the ETF that tracks the Standard & Poor's 500, aka the S&P 500. And yesterday, we made an all-time high. Today was the FOMC meeting, and much to the not shock of everybody, that's correct, I said not shocking, the interest rates were increased today by 0.25%. The one thing that was a little different than most people anticipated is in 2017, instead of having 2 rate hikes of another 0.25%, they mentioned that they will be doing 3. So this news occurring at an all-time high in the markets is not a shocking event that we did in fact pull back a little bit today. And potentially the rest of this week and next week coming into Christmas, and then maybe we bounce. So realistically, and absolutely looking for something like this to occur on the SPY and the broader markets. And then from there, probably a pop of some kind into January, and then it's a giant question. I really don't know exactly what's going to be happening in 2017. I am still bullish going into the end of the year. I'm still on all time frames, long-term, short-term, primary, intermediate, bullish. Buy the dip on a longer-term level. Look for good support levels and resistance levels to buy into. So that's the SPY. Here's the Dow Jones, ticker symbol DIA. This is the ETF that tracks the Dow. And the Dow also all-time high yesterday. Some very, very nice one black crow candles today. So we're probably going to have a really fun time tomorrow in the morning trading room, and tomorrow afternoon and Friday, and maybe sometime next week. So I'm feeling like a little bit of bears are going to come in just slightly. Nothing magnificently bearish, but just a tad for a few days. Maybe. Right? Maybe tomorrow we gap up 1% and all things are changed. I don't know. It's entirely possible, but we'll see. So yesterday, that would be last night, we did have a live class, which you guys will be getting a recording of that and getting the video of that tomorrow. But we mentioned this trade yesterday afternoon, and also talked about this one on Monday in the Monday stock review, mentioning, hey guys, this is a beautiful evening star reversal at an all-time high. If you're playing it is a counter trend trade, just like just like the trade that we took on the weekly options newsletter back here. That trade we did get a profit on. That was the exact same analysis. I mean, literally, evening star reversal at an all-time high, look to buy puts into the 10. So the analysis was the exact same as it was late November. And so that trade also, if you got a chance to trade that from the class last night, or using Monday stock review analysis, we're able to get out of that trade already for 2 Rs. So that was a 136 put purchase earlier today on the IWM as it broke that low, and of course the FOMC meetings kind of helped it scoot a little bit scoot longer into the target. So the IWM, nice trade there. Speaking of weekly options newsletter, we posted one yesterday. As you guys know, every single Tuesday these things come out, and our trade was on Tesla, and the trade was bullish on Tesla, and you guys are going to be really excited about this trade. This was this was amazing. I will say some of you got triggered into this and some of you did not. Let me explain why. So here's the hourly chart on Tesla, and the trade setup was very specific. We posted it yesterday afternoon during market hours, and the entry was a 315 limit buy on a $200 call option that's expiring next week. The low of today, literally the absolute low of today, if you use the stock price, you definitely got triggered in. If you use the option price, the low of today on that option was 315. So literally the analysis on that option was correct to the exact penny on that option trade. So some traders got filled at 315 and some didn't. It could depend on your broker, it could depend on your the way you set the order up exactly. It could also depend on what exchange you went through. Brian Noel got 70% on this trade. Justin Jeffrey got himself a nice little R. Adrian got good on the trade. Rob Cole took Tesla this morning, bullish for a day trade. So again, Tesla doing its thing. Per the weekly options newsletter, I will be leaving this trade open until the close of tomorrow. but realistically, I don't think it triggers tomorrow. And if it does, I won't really love it as much because I really expected it to trigger today and then hopefully trade to our target, which it did today and or tomorrow. So anyway, that's Tesla. Nice little double bottom. You're feel free to keep your eyes on that. But really the target, that was just, again, 1 to 2 day move is and was the 100 simple moving average. So that doesn't mean it's totally over. You're welcome to watch Tesla here to see if it can bounce off this double bottom and see how it interacts with those long-term moving averages. But definitely a good buy low, sell high. You'll notice this little note down here. Here's your hourly charts on Tesla. And here's that double bottom. So the double bottom down here on Tesla, if I can draw it for you, boom, 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 boom. Close with the neckline. There's the retest. Gorgeous. Gorgeous. Oh, so pretty. So that's Tesla, ladies and gentlemen, out of support. Interesting to see exactly what that one's going to do. Probably trade a little bit higher, maybe, and then start trading to that 100 simple moving average. So that's Tesla. Gold today, ticker symbol GLD, had a big bearish breakdown, so I'm going to lose 1R on gold for sure. Earlier today, well, I'll say for sure, maybe not, but I was looking at a 111 call option for 75 cents right before the Federal Reserve meeting came out, and unless something monumentally bullish happens on gold between now and Friday morning, I'm likely going to lose an R on that trade. But gold is coming into a support area. It's a really, really big move. If you come over here on a daily chart, you can kind of see a monumentally, megalithlically large head and shoulders kind of a thing. I mean, it's pretty massive. So as it's trading down to the support, one would imagine that something like this could come in at some point. I just don't know if it's going to happen by Friday. But pretty much, I'm probably going to lose an R on gold. Keep in mind it is at a little bit of a support. Here's silver. Silver also down just a little bit, but not down nearly as much as gold is. This $14.68 price is going to be very, very strong support. And it'll be interesting to see what happens. Here's USO, which is the United States Oil Fund. And United States Oil Fund breaking out of a little bit of a triangle, trading back up to some resistance here at 1168. So realistically, here on a weekly chart, I think someone was asking, actually requested USO. You do have some lower highs. We did break out of those lower highs. But now, realistically, you're just kind of in a channel of some sort. So playing this channel would be a buy low, sell high, and right now we're in the sell high, buy low phase of that area. 1244, very, very strong support. I do like the fact we are making higher lows here. So yes, we are consolidating, but realistically, as we're breaking out of this triangle, unless this happens in the next 2 to 3 weeks, I just don't anticipate it does, unless we retrace small into about the $11 region on USO and then bounce into 1244. My anticipation for 2017 is that USO will just continue to trade sideways. Here's ticker symbol NOC for Joshua Taylor. He bought some calls on this one. Here's the daily charts, and he had a nice, really huge lower shadow yesterday. I'm sorry, not yesterday, the day before yesterday, and a little bit of a higher high and a higher low today. So depending on where you had your stop placement, Josh, I think you probably were able to exit out today or yesterday for a small gain. So good job on that one, buddy. This stock, all-time highs, a little bit of a double top up here. It needs a little bit more of a pullback on a weekly chart, just a little bit. So this could be the start here on NOC for a longer-term pullback, something like this, and just kind of start building a distribution phase, a little bit of a support there, and support resistance here, and some longer-term perspective support resistance up here. So probably start forming that distribution phase more than likely on Northrop Grumman. That's on a longer term scale, but shorter term, it does look a little bit more bullish with that lower shadow on the daily chart. And it also has a little hint of bearishness based on the gap that happened on Monday. Let's hop over here to Apple. And ladies and gentlemen, it's too much to say about Apple, but really we have been nailing the analysis on Apple since last Friday's real life stock review. Every single day I've been getting new emails from other traders who are making very nice gains on Apple, really just from that analysis, right? I got into a put on the 5th of December. There was a weekly option, lost on that put, and the very next day I was like, all right, well, cool, a little bit of a bullish candle. This candle on the 7th of December, I was like, yep, all right, guys. We're bouncing. Let's be bullish. And right, that was the analysis that you saw just a few stock reviews ago. Gain. gain, retest of the neckline, gain, another higher high. Right now on Apple, we are trading into this gap action. So you got a gap right there. That's why we're pausing here. Here's the resistance. So Apple did, in my personal opinion, trade to a target today. So you got this double bottom right here. At this point, looking for a little bit of a retest. And then potentially a pop going into 2017. That's just my guess on the short-term level. But right now, I have no short-term position on Apple, waiting for a little bit of a pullback and seeing if I can snag some longs again around 112 on Apple. Here's Bank of America that was also requested. A lot of the banks today made a little bit of a higher high and got some selling coming in. This looks like a great flag pattern. And realistically, ladies and gentlemen, what you got to consider on Bank of America is it's had a monumentally strong run. Bank of America, not a random pharmaceutical, not a biotech. No, one of the biggest banks in the world has doubled in value, pretty much. Almost 100% gain since June. Bank of America, okay? So this is a very good time up in here to be locking in profits, in my opinion. Would not be running to the moon to start buying some calls up here. I could be massively mistaken about that. If we break above the high of the last few candles, then sure, we can continue higher. But just do it on a very quick basis. So when I say a trade up here, we're looking at a shorter term bullish trade, if anything, because if you're looking to play 4, 5, 6 months or something longer, this is, in my personal opinion, unequivocally a wave 3. Beautiful double bottom down here. 1, 2, 3. Wave 4 will be coming in, which could be, I don't know, 4 or 5 months long, and then probably a wave 5. So yes, I do think we go higher, longer term. We have a beautiful breakout, but we will be rolling over on Bank of America. The question just when and how low. So up in this area, just protect yourself if you're in long, and if you're looking for shorts, just understand that be in, be out relatively quickly on those. Tim wanted to look at ticker symbol JO, which is a Bloomberg Coffee Index, which I didn't actually know existed, but hey, why not? Here's the daily chart on them. On this JO particular trade, obviously gaps a lot since it's traded 24 hours, and it did come back to a really good support. So notice this exact same price that bounced back in August. It is bouncing there again, and on an intermediate level, we are making higher lows and higher highs. So Tim, looking to get in long down here with call options, my friend, does make a lot of sense. 2 things I want to bring to your guys' attention before we go. One big announcement, Smith & Wesson will be changing the name of their company due to an approved name change by the shareholders, which is kind of interesting, I feel like. So if you want to copy and paste this link, it's from Investopedia, from Smith & Wesson, and they're going to change their name to American Outdoor Brand, which is changing a 160-year-old storied Smith & Wesson tale, which I think is very interesting. So this is kind of the most unique paragraph, is really that they're going to be much like their peer Vista Outdoors, which sells outdoor gear but also rifles, whereas Sturm Ruger is going to be the only sole publicly traded firearms industry pure play. Really a very interesting move by Smith & Wesson. I don't know how big of an impact that's going to have fundamentally. I'm sure the ticker will probably change at some point, but it is at a support level. No question about that. Down at this $20 price range, but right now pre-market, nothing's really happening with it. I don't know if it's just going to be swept under the rug and no big deal. Some people will like it, some people won't, but that's some serious history. One of the longest, that company, Smith & Wesson's been around for a long, long time. And interesting to see a Goliath go down like that. One other thing for the particular analysis of the longer term S&P, here's the SPY. I just want to bring a chart to your guys' attention. I do plan on doing this in the next few weeks as 2017 either approaches or gets closer. But I want to bring a chart. Let's see if I can load this chart. Why isn't that loading? Oh, I got to put the H in. The H is key. HTTPS. Let me see if I can pull that up. Here we go. Let's see if this works. It should. So anyway, I'm just coming back over here to the SPY, and I'm going to pull up a weekly chart and just give you guys another opportunity just to look at the longer term and just look and see how pretty this thing is. And also, I'm going to gloat for like 32 seconds approximately once this thing pulls out. But here's a chart that we posted 8 months ago on the S&P index fund, the actual S&P 500. And I just want to look at this because this was drawn freehand. And I'll kind of read this to you simply because, I get a lot of traders mentioning that as far as the trades are concerned, I'm always bearish. I'm always looking for the market to go down. And I really think that's the exact opposite of what I'm trying to portray. I'm always bullish on a long-term scale. Perma bull is the way to go. And I always prefer, when I say buy the dip and hey guys, be careful, it's going to pull back. That's not me being bearish. That's just me saying, hey, this is not the most amazing time to buy. You could probably get in later at a lower price. So again, this was posted 8 months ago, and it was kind of my plan for 2016 is to go into cash when the S&P gets into the 2120 levels. I'm quite confident this year we trade higher from right now. From there, I'll wait a bit on the election, anticipating in a large way one of two things. My biggest plan is outlined in blue. That's what I wanted to happen because that would just give us a great opportunity to get in long at the bottom. And again, that was not me being bearish. I was like, hey, I would love to see this happen. I just don't think it will. So the next note was what makes the most sense from wave structure, what I actually think plays out is in red. I'm 89% confident a Republican wins the presidency. So the red line, check this out. You guys might like this. That's why I love TradingView. But there we go. So the freehand drawing, pretty much I mentioned that we'd have another high breakout, and the level was approximately 2173. So we got to about 2190, and then we have a dip. On freehand, I drew that we'd have a dip at about 2106, and we went down to about 2085, and then we bounced. And notice, again, that the timing projection's not supposed to be accurate and exactly, but I can always get better with that. But I mentioned in this freehand drawing that we would have likely a slowdown or a rest at about 2248 level. So that's exactly where we're at. So this little drawing is going to anticipate that more than likely we will get some type of slowdown, rest, or distribution coming into the actual Christmas holidays themselves. And then from there, we probably do go higher. Now, of course, this retracement could be a little bit bigger. We could trade all the way back down to 2148. And if we do that, ladies and gentlemen, again, I am bullish long term. I'll be looking to buy the dip, and I'm excited to see exactly what happens. So I'm just kind of showing you this projection and plan to let you know I'll be doing another one in 2017 for those who are interested, just giving you guys my big long-term perspective. I'm trying and getting better and better at my macro view of the markets rather than just getting wrapped up into awesome, profitable weekly options. Also looking at the long-term, big picture, 401k, IRA type of perspectives that I know a lot of you will probably have some deep and in-depth discussions with families in the upcoming holidays. So ladies and gentlemen, thanks so much for watching this Wednesday Real Life Stock View. One additional update. This marks 3 days with no food and only water. So I'm on a fast right now, that is correct. So tomorrow will mark day 4. 4 days, that was the challenge that another real life trader brought to me. And there are a few other traders going in just to see if this is a mind over matter kind of thing. And so far, we're doing pretty well. So I'm excited about that. I've never done a fast before. So tomorrow will be my 4th day. Right now, I'm coming up on 3 days. So in 3 hours, it'll be 3 days exactly. In for the home stretch, ladies and gentlemen. Remember, if you put your mind to it, you can do it. Ladies and gentlemen, I will see you Friday. And until then, remember, love life, enjoy it. See ya.